All right, it's just gone 5 p.m. Good afternoon, ladies and gentlemen. Thanks very much for joining Trafalgar's webinar series. My name's Andrew Schaefer. I'm linking in from Trafalgar's Johannesburg office. This evening we're going to talk to a topic of critical success factors, particularly directed at trustees and directors for their roles and governance roles in community schemes, and also some sustainability success factors. Kareen's just showing on the screen just the webinar series that we've covered over the last few years. You'll see the topics. We have tried to cover a number of, important priority topics which make a difference in terms of sustainability and success in community schemes. However you'd like to measure success. They are all loaded on our website, on our YouTube channel as well. And our training website is training.trafalgar.co.za. There's lots of free training, useful information, and certainly worth looking for a relevant topic if a query comes up or something important is on your radar in terms of researching the ways to deal with it. We'll try and finish by 6. How we're going to tackle the topic is I'm going to just cover my thoughts on a particular best practice topic. They did 9 different topics that I've come up with. This is based on 20 plus years of experience in this industry, being closely involved with the management of community schemes. After each topic, I'm going to ask my colleagues who are joining me tonight, Peter Menon, Trafalgar's Head of Legal and Marketing, and Kareen Coetzee, our long-standing property management consultant, just to add any comments or thoughts they've got, and also to bring into the discussion any questions or suggestions which might arise. So please do pop in the chat any best practices that you would like to suggest, any case studies that might be relevant, any queries, and we can certainly bring that into the discussion. As per usual, a short questionnaire survey will pop up at the end. Won't take more than 30 seconds to answer, really just to let us know, how did you find the webinar? Was it helpful? Was it practical? And also a chance to give any suggestions about other topics you would recommend we cover and get to in the remainder of our series. We're aiming to offer webinars in August, September, October, and then we'll go into a year-end recess until March next year. So there will be a break because of year-end time pressure, etc. So that's what we've got in store for us tonight. So let's get into topic 1, which I've titled particularly talking about trustees and directors that have a role and a responsibility in terms of their community scheme. It obviously does cover homeowners associations, retirement complexes, share blocks as well. But, it can also refer to owners and residents in complexes. So importantly, be informed, be engaged, be prepared, and be organized. And let me unpack what I mean by that. So the first point, be informed. Be informed of your role, of the expectation of your role, and very often the time that takes to perform that role. So one of the key examples is at the annual general meeting, typically trustees and directors are elected to serve a function, to perform a governance role for their community scheme. And that implies, taking certain decisions on behalf of the community scheme, being responsive in terms of the role, and being able to allocate the time to perform that role. And one of our biggest challenges as a managing agent is trustees who are not informed and who are completely disengaged. They literally do not respond to emails, to questions, to decisions, to signing off creditor payments or audited financial statements as examples. And that can literally paralyze the community scheme, because the very people that are in the role to take decisions and to allow the operational management of the scheme to continue are not performing the role, and therefore there's a significant operational gap. So it's really important that, mindfully role players who accept the nomination and election as trustees and directors are informed of what's involved, and they are willing to commit that time. And they then work with the rest of the team, whether it's the rest of the trustees and directors, whether it's the managing agent, the caretaker, whoever, to perform that role responsibility. And, I'm fully aware that it's a volunteer role. It occurs typically after hours. It does erode personal space and family time as well. and it can be a foreign environment in terms of the legislation and in terms of what's involved. But certainly those that are willing and those that are able to allocate the time, there is a lot of support. There's a lot of information that is available, and I'll talk to that now. So, it's really a shout out to, be informed as best you can, really just have a positive attitude and allocate the time, and then to, progress from there. In terms of the legislation, there's many acts. I'm not certainly going to go into any detail tonight. I'd just like to say that they are all loaded on our training website, the same one I mentioned before, training.trafalgar.co.za. Karina's loaded them there in Word format so that they are searchable. So I would suggest that if there's a query, if there's an issue, if there's a challenge, it's a good place to start to open the act, whether it's a Sectional Title Schemes Management Act or a CSOS Act. In the case of homeowners associations, it would be a good idea to go to the MOI of that homeowners association and to search on the key topic. Find the relevant clauses and focus specifically on that issue. That makes the research finite, it makes it time efficient, it makes it practical, and certainly it will be a good way of learning through exposure and through experience. Then advisors, most certainly, as I said, it can be a foreign arena, it can take a lot of time, it's personal time. Reach out to the advisors that are there and willing to help and have the experience and whose core business is community schemes. So, speak to your portfolio manager. If they're not contactable or responsive or aware, we're looking at Karine Coetzee. That's an encyclopedia of knowledge and experience in community scheme issues. And Karine is backed up by the Paddocks Club. Graham Paddock offers a membership club which provides support and answers to questions. Karine has got a lot of frequently asked questions available. And on our training website, you'll find a question of the week, document or link where Karine has covered, a whole library of frequently asked questions, common topical issues that come up, and they're short one pages that give, a very clear answer with a legal reference to, as many topical issues affecting community scheme management and governance as I can think of. So again, have advisors that are available to you, have their contact details. Don't hesitate to reach out to them. They are available to support you. They can help navigate an environment which might be unfamiliar or foreign, and they can save time, to give an authoritative answer. And if Karine doesn't know, which is normally unlikely, she has a hotline to Graham Paddock, to the Chief Ombud, to a lot of advisors. And we have at least 4 specialist sectional title attorneys that we work with that are also well versed in other community scheme types, and that we are very willing to ask advice and input from, and to give you good practical advice literally for free on a same-day basis. So, have the advisors, mapped out, have their contact details available, be comfortable and, free to reach out for those advice. And, also we're offering free consultations. So on our website, the Trafalgar website, top right, there's a Calendly link. You can book a free consultation, actually comes to me, but we can have a discussion about a particular case study, a particular challenge, and we can discuss, some more details and work out sensible next steps. And only in extreme cases would a paid advisor in the form of a specialist attorney be required. So, that's another sort of a suggestion and a way to be informed and to be engaged, and certainly to make the role as time efficient and effective as possible. I think I've touched on the resources, but there's lots of training content available on our website and others. There are clubs you can join in terms of Paddocks, in terms of the Village, which is a TVDM resource. Again, it's a place where you can raise questions, where you can look for commentary from other role players. There actually are Facebook groups of sectional title schemes where people pose questions and get answers from those members. So the resources are many. It's a question of finding ones that you like, that you can access quickly and easily, that you find effective, and having that in your armory of resources that you have available. And then I think many of you will know, but there are certainly opportunities to outsource the roles and responsibilities of trustees. In the case of sectional title, that would be an executive managing agent, which can be appointed by a special resolution. The executive managing agent would then carry the responsibilities and roles of the trustees. They're required to report to the body corporate members every 4 months, can be done more often, and they then have the experience, the time, it's a paid service to cover the roles and responsibilities, and then it would fill a gap if there are no owners or members or even anyone outside a body corporate is enabled to be a trustee, and that would eliminate the need to be informed, engaged, prepared, and organized. It is possible to find professional trustees. There are people that do it as a living. They are willing to serve as a trustee, and those sort of people can guide and support and provide a service where others aren't willing to do it on a volunteer basis. So really, in conclusion on this best practice, it's to play the role that is required. It's really important for the optimal functioning of a community scheme that the trustees and directors are responsive, they are proactive, they reach out for help, for resources, whatever is required, as it's required, and that they work collaboratively, with the supporting team, whether it's their caretaker, whether it's a portfolio manager, or any other service provider that is there to make sure that the community scheme operates efficiently. So I'm going to pause with that sort of starting point in mind. Peter, anything that comes to mind you'd like to add to or comment further on?
So, Andrew, you said we shouldn't read through all of the legislation tonight. I'm going to try and not do that, and bore our participants this evening. Legislation can sometimes be incredibly boring. So I think with the majority of concepts, when it comes to legislation, it's all about compliance, and it's all about getting things in order so that you can move forward. I know for a lot of clients, specifically when it came to the implementation of POPI or PIA or even FICA in certain instances, currently the discussion is also being held with a number of complexes in terms of the PPRA who would fall into a category of providing certain services as a property practitioner. It's important here to just take a step back. Compliance is all about a journey. It's all about making that first step. It might seem incredibly difficult from the beginning to be compliant, but it's all about just taking that first proactive steps into compliance. And there's a lot of processes that we can take you through as well, that we've taken clients through, specifically when it comes to POPI and the implementation thereof, your disclaimers, the documentation that you need. So it seems almost insurmountable when you start having a look at the piece of legislation. But the compliance journey starts at the single step. So if you're currently worried about that compliance and worried about taking that initial step, there's a lot of resources, as Andrew mentioned, that we can take you through, and assistance that we can provide from that side. But don't feel overwhelmed. There is always the first step that you can take, and it's always going to put you on the right level to compliance from that perspective. And then from an advisory perspective as well, as Andrew mentioned, Perrine is available for any commentary, and we work very closely with 3 external advisors as well. So if you need those resources, please just make contact with us.
No, I fully agree, Peter. I mean, it's a journey, it's a step-by-step approach. It's tackling current challenges and dealing with those, and then getting to the next. It's eating the elephant one step at a time. And, we, the portfolio managers, our advisors, are all here to share the journey and to provide support and to provide guidance, for the process. But, it does require engagement, willingness, time, to work collaboratively, because, only the trustees or directors have the authority to take decisions on behalf of their community schemes. Perrine, anything you'd like to add?
Thanks, Andrew. No, all I would like to add is what you already said about the free training that we offer. So we've got an online e-learning training course for sectional title trustees that you can follow in your own time. And then we also have an introduction to homeowners associations for our homeowners association directors and trustees. They are both free of cost. all you have to do is enroll on our website, and you do them online, like e-learning in your own time.
Great. Thank you. Alrighty, we can go to the next best practice, which again is quite a high level statement, but you'll see it now. Communicate effectively with body corporate members and residents. Day in, day out, we get approached by frustrated owners, concerned owners, and other residents who aren't necessarily owners, complaining about something or other. And, very often when we look into it and, get to the grassroots issues, it's communication gaps which have arisen. So just communicating effectively and consistently with body corporate members, being the owners and residents and other stakeholders such as staff, service providers, and the like, depending on the case, goes a very long way to keeping people informed, to providing updates on the ways certain issues or gaps or maintenance problems are being dealt with. And it can preempt frustration, it can preempt escalating the issues, it can preempt CSOS disputes and animosity, which is very much, what we are trying to avoid in a community scheme where members live as neighbors, they live around each other, they see each other on a daily basis. It stands to reason it's a good idea to promote good neighborly relations and positive, culture and morale in the complex. So this is really a, high level statement that, consider how to communicate, what to communicate. But, I do think transparency is important. Communicating regularly is important. It's as easy as dropping a short email to the portfolio manager, please update the body corporate or the HOA XYZ, and then it would be up to the portfolio team to circulate that particular update. Many bigger estates have newsletters. That's a very good way to provide relevant updates. Many have WhatsApp groups. Again, it's a very quick way to circulate an update. Others have notice boards. Typically a multi-channel approach is useful because some people prefer some channels to others or would see certain updates in a particular place versus others. So it's easy enough to distribute multi-channel unless there's a preference that's been agreed otherwise. But, I think be free and quick to communicate, because it does go a very long way to promoting buy-in, to promoting alignment, to managing expectations, and to keeping everyone on board. And it's such a pity where, there's frustrations arising, a lot of time taken to deal with frustrated residents just because they haven't been in the loop, they haven't been advised in advance, they haven't been informed, as they should have been. Also quite important to work out, quite quickly, who are the stakeholders that need to be advised about something? Who does need to be informed, and are we being complete and comprehensive in the way that we are communicating? So it sounds obvious, it sounds like general knowledge or standard practice. It's amazing how often it doesn't happen. It tends to be an afterthought. There are estates where literally a trustee or director holds the communication portfolio. They treat it as a portfolio because they apply that level of priority and that level of time and capacity to the importance of communication. And, it's that important. So I really would urge, the trustees and directors, with the portfolio teams, to make sure that they are communicating in line with expectations. And, one can take a cue from the level of complaints or approaches from concerned owners and, respond to that. And really sort of, being proactive in this way would be measured by limited approaches by frustrated owners where, the sentiments around communication gaps are low and minimal. And, I think it's something that trustees and directors can take pride in, is keeping everyone in the loop, informed, up to speed, and at the same level. And be methodical and pedantic about that as well. I mean, a good example might be a painting project at a complex. Really, it's a complex project. It's an expensive project. It's typically been a savings for many years in a maintenance plan, and it starts with, advising the owners about the approach, the timeline, the budget, how contractors are going to be selected and evaluated, who's going to be the project manager, what are the guarantees, how will the color be selected, etc. The logistics of the implementation closer to the time, snagging at the end. You can see that there's multiple checkpoints of communication. It's a multifaceted approach, but it's going to be important. If it's done well, the project will be well received, there'll be buy-in, there won't be pushback, there won't be complications, because expectations are managed in advance. And importantly, there will be channels of communication if something does crop up, which it normally does in a big project. But if owners are in the dark about all of those details, you can imagine they're going to be anxious, they're going to be aggravated, they will lash out because they haven't been involved. And that's going to take a lot of time and unnecessary aggravation to compensate for. So, just to conclude that topic, please do have a default for, consistent, regular, effective communication. Intensify that if there are issues, if there are complications, if there are challenges at the estate, discuss it. Don't hesitate to invite comment, invite suggestion, call an owners meeting, a residents meeting, if that would help to debate and discuss options. And, have a very significant focus on it, because, the best estates we see are normally the ones that have a very strong communication style and effort in place. Karine, agree with that? Any comments to add?
Nothing that I can add to that. Thanks, Andrew.
Okay, Peter, on board?
Yeah, Andrew, perhaps just one thing. We've received a number of queries, even just in this week, where the trustees aren't necessarily certain of what documents they can provide to owners and to other parties, specifically owners. There's an interesting section in terms of Section 27 of the Sectional Title Schemes Management Act that actually lays out exactly what records and documents a body corporate must keep. And that document or record, if it is asked for by a member, it must be supplied to that member by the trustees. So it's important to take note of that. I think the real operative word that Andrew used there is transparency. At the end of the day, the owners are the people, in terms of the Act, that are entitled to this documentation. Who wouldn't want to have sight of this document if it's going to lead to the success of your investment? So it's important to keep those channels open. If there are requests for information, it's important to provide that to ensure a cohesive whole. Thanks, Andrew.
No, absolutely, Peter. And I mean, almost on a daily basis, I see, where owners get concerned and frustrated. Generally they want to start seeing all the financial records, the invoices, the bank account statements, the bank balances, etc. They want to collect information because now they're wanting to investigate their concerns and prove a point, that they are not informed, and they want to fill gaps in terms of what they're aware of and their anxiety. And very often, if those owners have caused, difficulties for the trustees and directors, they try and obstruct that access to prove a point, or because, they don't respond because of time or whatever. And, that escalates into backwards and forwards emails and more heated exchanges, etc. And, ultimately it could get to CSOS with even more time. And, the legislation does provide that access. So much better to be transparent, to make it easy. There shouldn't be anything to hide. It's a way of filling those gaps, alleviating the anxiety, getting owners on board, and resolving disputes in that way. So, make it easy. We're there to help. The legislation does provide access. It might as well be, complied with quickly and easily. It is personal information, so we generally do bring it to the attention of trustees and directors so they're aware. But because it's provided for, and typically the members, it is their own information in terms of members of a community scheme, it therefore should follow accordingly. All right, let's move on, if we may, Karine, to best practice number 3, mapped out for tonight. And, touching on what Peter raised earlier, let's get governance right. It is multifaceted. It most certainly can seem overwhelming to those who haven't had exposure before. It is a bit frightening when we think about time constraints and, trustees and directors trying to keep to grips with this after hours, overtime, in the personal time. But, again, that's where the professional team is ready and available and equipped to support, to advise, to guide. And many of these are once-off registrations, once-off processes, which then have a key governance element in place and continuing. And I've just mapped out some of the key ones. This is not an exhaustive list, but it's certainly a priority list. And, I'll just quickly run through them. But CSOS, many of you will be fully aware of that, the Community Schemes Ombud Service. But it's a legislated requirement to be registered for a community scheme, to have a registration number to confirm that registration. And linked to that is conduct rule approval. I'll touch on it just now, but conduct rules do need to be approved with CSOS with an approval certificate to make them enforceable. Otherwise, they're not enforceable, which is a significant gap. And then annual returns need to be provided to CSOS after the annual general meeting. They want to see the minutes, the financial statements, and the levy schedule, because they update their records on what CSOS levies they are wanting to receive. So yes, it's red tape and perhaps seen as bureaucracy, but again, let's get the governance right. Can be done. We're there to help. It's paperwork. It's quite simple. Once it's in place, it ticks over. And unfortunately, I don't want to talk about sanctions and penalties. They are there. Better just to get it right, and then it's done. Same point for SARS, the Revenue Service. A public officer does need to be on record. The public officer is responsible for annual tax returns, tax queries. It is a requirement for SARS to be on record. It can be a professional. Trafalgar offers that as a service, auditors as well. It can be a trustee. It just needs to be done. And, body corporates that aren't registered are leaving themselves open for fines and sanctions and comeback, and it's not worth it. So another important governance point to get right. Peter mentioned information officers to be registered with the information regulator, and also to have a PIA manual that's registered, Promotion of Access to Information Act. So again, that can be outsourced. Trafalgar provides that service. It's quick and easy to get done, then it's done. And again, it mitigates the risk of not having the right governance requirements in place. Do make sure that the annual financial statements for the community scheme are signed off every year. It is a requirement. It can be done. It's important in terms of financial management and governance. We quite often see a query where new trustees or directors that are elected are uncomfortable to sign financial statements from prior financial periods where they weren't in office. I don't agree with that, because, whoever's going to sign it typically may not have been involved. It is the role and responsibility of two trustees or directors to sign it off. It's completely possible to, review any queries or concerns with the accountant involved, even with the auditor, to get it resolved. And as a last resort, it can be presented at a general meeting to be approved by the members, by the body corporate or the homeowners, and to pass a special ordinary resolution to authorize the office bearers, the trustees or directors, to sign it. But it is necessary to get it done. A backlog just creates complications. It typically should be presented for review at an annual general meeting. And, it's a very common holdup for general meetings, which is unfortunate. So, it really is a shout out to the trustees and directors. Focus on having these signed off in time so that your annual general meetings can continue within the prescribed time period, which I've mentioned there, which is within 4 months of the financial year end for sectional title schemes, and typically homeowners associations. It's specified in the Memorandum of Incorporation, so the MOI, and that should be a source document which is readily available to directors so they can refer to it in the case of queries about the management of their scheme. So again, this is a list of governance requirements. It's legislated. It's not for us to debate if it's right or wrong. It is legislated. It's compulsory. And again, it can be done. And, you can certainly allow your portfolio manager to provide guidance, to provide support. And, once it's in place, it does tick over quite easily on an annual basis. Good to be informed about it, because, any new trustees or directors should want to be briefed that these are all in place and that the governance requirements of their scheme is covered. Peter, this is a topic that's close to your role and expertise. Anything to add to it?
Andrew, I think you covered it really well. I think just possibly for some HOAs or directors in HOAs that might be with us tonight. With the current SIPC process that is being followed for annual returns, and I'm sure some of you are aware of this, that for every company, whether it be a listed company, whether it be a PTY Limited, whether it be a non-profit company, at the moment needs to submit beneficial ownership. Beneficial ownership is, at the end of the day, who owns a company, the shareholders. And some of you might be aware that SIPC hasn't actually filed this information in the past. They've got a record of who the directors are of the company, but they don't actually capture information of who the shareholders are, who the actual owners are. So currently, before an annual return can be filed through them, you need to actually go and submit your beneficial ownership. The interesting thing about that is, obviously, it's the law of unintended consequences, that NPCs usually registered with members now need to go and file their beneficial ownership as well. So we have had a long discussion with SIPC during the week about what to do about this, because they only allow you to go and load 20 beneficial owners, and then you need to go and change it on transfers and sales and all of this. So it creates a huge conundrum for our clients. But now you can submit a actual document just with the owners thereon, and they should receive that as beneficial owners. We're still trying to iron out this process. It is pretty new, but just if you're aware, if you're an HOA registered as an NPC with members, you actually need to follow that route.
Okay, and we certainly help with that process as well, and make sure that the CIPC registrations are fully up to date for community schemes that form homeowners associations typically, and that the annual returns which go with that are up to date as well. All right, Karine, in the interests of time, can we move forward? And I'll accelerate a little bit so we don't run out of time. So the next topic we're going to get to is a key one, effective financial management. So there's absolutely no question that community schemes with positive cash flow with funds work well. And those with negative cash flow and cash flow constraints and cash flow crises don't. And they quickly get into all kinds of trouble with maintenance backlogs on municipal accounts, and difficulties maintaining services at the community scheme. So, being positive, how should it be done? How do we get it right? So it really starts with a budget, budgeting for a new financial year in advance, and setting the levies to cover the forecast expenses. That is the way that the levy should be set, and it's amazing. We have a few schemes that don't get it. They don't understand why levies need to increase, and they certainly don't buy into levies covering costs. But it's an inevitable mathematical situation. If there's a shortfall, every year it's going to erode reserves. At some point, reserves are going to run out, and at some point, there'll be negative cash flow, and there will be a crisis of service delivery. So it's absolutely crucial that budgeting is thorough. It comprehensively forecasts expenses, that the levies are set to cover those expenses. Those levies are allocated in terms of PQs or nominated values or as per an MOI, and that's approved at the annual general meeting. And therefore, there's an expectation that levies that are invoiced, that are collected, should reasonably cover forecast expenses. Yes, if you look at the deposit at the bottom, arrear levy accounts, debtors, is a significant factor. In some estates, it can paralyze the collections and cash flow, and then measures need to be taken to address that, because remember, the budget very often forecasts that the full levy income is going to be collected. And we all know in some estates, there unfortunately are levy debtors, there are arrears. Those owners are relying on cash flow from their neighbors to keep services going. And the body corporate does need the reserves and the resilience to be able to follow a process, typically a pre-legal or a legal process, to make sure that those levies come in, and there's a clearance certificate mechanism to make sure that those levies are collectible before a property can be sold and transferred. But going back to the beginning, budget carefully, budget in advance. That also helps understand the expenses of the estates. It gives a very good understanding of, how to interpret the monthly management reports, because, you would have a good insight into what expenses to expect, what values there would be, and therefore a better insight into variances which might arise and be reflected on the management report. Then please, the chairman and financial trustee or director should most certainly allocate some time every month to review the management report in detail. I talked earlier about time. I know it's a challenge, especially where, again, it's a volunteer role, but it's so crucial to look at the management report. It's all the key information in one consolidated report. It does become quick and easy if it's reviewed each and every month, because then the context is clear. One is looking for trends, one is looking for exceptions, and it becomes, a quick and easy exercise. And it's also a way to be fully and quickly informed in terms of the financial management performance of a community scheme. So literally allocating the time and getting that review done on a monthly basis by the key role players, which at a minimum should be the chairman and trustee or director assigned the finance portfolio, is a critical success factor, no question. And then those parties should take a very close look at variances to the budget, understanding why is there a variance, why is it different to what was budgeted. Variances then put pressure on your levy income, remembering that your levies have been set to cover expenses, not more than that. So it can create a complication if those variances can't be addressed and closed. And it also gives insight into effective, cost control, at a community scheme, where typically there are significant constraints in terms of costs, in terms of cash flow, in terms of affordability. So it's really important to look after the cents. The rands then look after themselves. And, it's significantly helped by looking at the management reports, going through the information, etc. Now, there are many schemes where there are trustees or directors that aren't finance and accounting people. They don't have the experience, they don't have the skills, they therefore anxious to do it. It can be a confidence thing, and it's not straightforward. It then isn't something that's natural and comfortable. It might take extra time initially, and certainly it is one of the challenges. But again, reach out to the advisors that are available. Arrange a meeting with your portfolio manager. The accountant concerned can be included. Go through the report with them. They will guide you on what to look for, where to look, how to understand certain elements of the report, what are the key takeaways. They would be able to answer questions and repeat that month in, month out, until it does become more familiar, more practice, more comfortable, and a more standard procedure. And again, it's just two people, the chairman and the finance trustee or director, that should actively take part in that role. And, the takeaways I've talked about. And I do believe if that is done consistently and effectively, it plays a significant role in promoting effective financial management, positive cash flow, the ability to pay creditors for service delivery on a consistent basis. And definitely that helps achieve a happy, more comfortable, and a more successful community scheme. So I can't emphasize this enough. It really is the engine room of running an estate. And, so important that, active attention is applied in this area, and, that advisors or practice or otherwise is used to get to a point where this can be achieved on a monthly basis. And, also if this is done month in, month out during the financial year, it makes it so much easier to review the draft financial statements, to be comfortable to sign those off as two trustees, to present it for review at an annual general meeting, to answer questions from members that might come up, and to take ownership of the financial management portfolio. But similar to any business, any legal entity, finance is a cornerstone of the viability and continuity of that legal structure. And, crucial that it's monitored, that it's managed, and that it's a critical success factor focus. Karine, anything you'd like to add to this topic?
Yeah, Andrew, I would just like to add that from 2016, with the new Sexual Title Schemes Management Act, the requirement for a reserve fund and a 10-year maintenance plan. So that would alleviate or obviate the necessity for special levies, for instance. And it's also maybe, I think, a good idea for homeowners associations to look into this. It's not a legislative obligation for a homeowners association to have a reserve fund or to have a 10-year maintenance plan, but I think it's a good practice. It's a good thing to look into.
Excellent. Thank you, Karine. All right, let's move forward. So my next critical success factor 5 for tonight, is to mitigate risks. And I think this is important for trustees and directors who are volunteering to perform a fiduciary role and responsibility as volunteers in their free time after hours, as I've said many times. But, the way to mitigate risks for the community scheme in their role, insurance is a significant factor. And insurance is not familiar or comfortable to many people. In fact, for many people, it's a grudge expense, it's a negative connotation, it's something one leaves to last, and it's a frustration. But for sectional title schemes, it's a legislated requirement, so it's mandatory. And, therefore, somebody, should take responsibility to, cover insurance on behalf of the trustees or directors. So, a good summary for an insurance policy is the policy schedule. It's really an executive summary of what cover items there are, what the values of those cover elements is, and what excess might apply. So it really is the very key summary of what an insurance policy covers. It should be, on file for the chairman at least, and whoever's getting involved with insurance, and be aware of what does the cover involve, and what are those limits, etc., and how does it work. And that will demystify the topic and make it a lot more accessible to the community scheme. In sectional title, again, there's a legislated requirement to have a replacement value survey conducted by a registered professional every 3 years. And yes, it's a cost, but we're seeing more and more often than not that that replacement value survey, number one, it checks that the insurance cover is correctly matched to the requirements of the community scheme. It can sometimes reduce the insurance cost because it specifies a lower replacement value, which drives the premium. Also, it might protect against claims not being paid because the community scheme is underinsured. And also, really importantly, it double checks for any improvements on the common property which need to be specified in the insurance policy to be covered by the insurance policy. An example of that would be a generator, CCTV equipment, solar equipment, etc. Those need to be specified as line items on the insurance policy to make sure that they're covered and that any claims related to them would then be honored. So, do pay attention to the insurance policy because it's a key mitigator of risk, both personally to trustees and directors, as well as collectively to the community scheme. It's important just to be aware of, there's normally cover line items in terms of public liability cover, meaning somebody that would be injured on the common property for whatever reason, if there's a contractor working, for example, or something falls off the structure, and professional or trustee indemnity insurance and director indemnity insurance are also available, protecting any claims, in a personal capacity for those that are performing those functions. So really, really important. Good to know about it. Good to read through the policy schedule. It's not as scary if you take the time to go through it. It is the executive summary of the policy. And remember that your broker is the advisor that should be available to answer questions, to provide support. And last point on the insurance is, the objective of an insurance policy is not to claim as much as possible. Because you can be sure if your claims ratio is more than 60%, if your claims are more than 60% of the combined annual premiums, there most definitely will be a severe premium increase. So by not being sensible and prudent about insurance claims, is one way to dramatically escalate insurance premiums. And anyway, for those that aren't aware, there's a huge disruption in the insurance industry because their reinsurance rates from the global reinsurers have dramatically increased. And so they are finding every way possible to come off cover, to increase premiums, and to reduce their risks. And that is putting a lot of pressure on finding cover anyway and on costs to achieve insurance cover. Periodically, if there are a lot of claims, the insurers will send a risk assessor to a complex to evaluate maintenance and to look for any risks at the complex. And they will very often give a remediation letter, a letter giving 30 days notice to cancel the insurance policy unless certain items are dealt with to mitigate that risk. And, if a scheme is not up to date with maintenance and there are glaring gaps all over the show, it can put the reality of insurance at risk because the insurers will cancel if those risks are not well managed and addressed as per risk assessment. Just quickly, a few points. The fire equipment needs to be serviced every year. A certificate of compliance needs to be provided. It should be forwarded to the insurers. There should be a major service done every 5 years. If that is not done, the insurers will not honor a fire claim. The very first thing they will ask for if there's a fire-related claim is to look at the certificate of compliance and to check the dates. So it's important. It's not an expensive item. It just needs to be scheduled and followed through. And that is something that Trafalgar's maintenance department, as well as portfolio managers, will track and assist with. Lift Annexure B inspections, again, same point. They are required every 2 years. They are safety inspections. The lift company the lift inspector is supposed to turn off the lift if the inspection fails or the inspection items are not addressed and the Annexure B certificate expires. And again, it's moving equipment, it's high-rise equipment. There's risks if it's not safe and if it's not serviced. And there is a requirement to have a service provider servicing the lift every single month, and that needs to be on record with the Department of Labour. So do take attention to that. And, we have many inner city schemes around the country that cannot afford the maintenance costs of lifts. They cannot afford the inspection items that arise in old lifts particularly. And, in those cases, they just say, turn off the lift. But it's really important that it's decommissioned safely. It can't just be parked at the 10th floor, for example, because the ropes can rust, the equipment can fall, it can cause an explosion, in the basement or ground floor, and it's dangerous. So a lift that's turned off must be decommissioned safely, anchored on ground floor level. All the doors need to be locked. I'm aware of 2 children that have fallen into decommissioned lifts in the last 5 years with mortalities because the lifts weren't safely locked and landing doors locked. So there is risk. It's important it's done. And again, lift service providers will provide that support and or our maintenance department are well versed in it. So again, an important risk mitigant. Ensure that the service providers working at a community scheme have public and professional indemnity insurance. That means they have insurance cover in place. They're more likely to be responsible because they're aware of that, but there is recourse. If something goes wrong, which it inevitably does over time at some point nationally, so it's important we do endeavor to check those if we're aware of a job in advance, and there's paperwork which can be placed on file, can be double checked, and it's certainly a signal of a responsible, competent, and professional contractor. A small point, but important one, make sure that there's disclaimer signs on the common property, making sure that those parking and using the common property are aware that they do so at their own risk, that there's no comeback to the community scheme if there is injury or damage on the common property, and that signage is very clear and is very visible and is very specific. And last point on swimming pools, again, I'm aware of at least 3 drownings in community scheme swimming pools nationally over the last 5 years. 3 mortalities, tragic, will affect those families forever, and it could have been avoided if the right safety equipment and the right attention was applied to those swimming pools. So crucial, make sure they've got gates with springs, with double latches, with fences, with nets, with safety equipment. Be aware of the bylaws. Make sure it's done. It's a once-off that can be checked regularly. It's not expensive. It can save lives. So again, these are points which have come up. I've seen case studies affecting all of these points over time, and it's crucial that the portfolio team assists trustees and directors to get these right. And once they're right, they tend to tick on in a more manageable way year by year. Peter, would you like to add anything to that point?
Nothing from my side. Thanks, Andrew.
Okay, thank you. All right, moving on. We've got 10 minutes, so I must pick up the pace. I won't go through all the bullet points here. You can read them, but I'd like to just make the key statement: effective facility management matters. It matters because this is people's homes. They typically see the homes every day. If it's an investor unit, there is somebody, typically a tenant, living there. People, they apply a high level of expectation because it's a day in, day out facility. It's an important investment for many people. It matters how it's looked after. Security matters, cleaning matters, presentable gardens and grounds makes a difference to the living conditions, to the atmosphere and culture in a complex. If buyers are coming to visit, it's the first impression, it's the shop front of a scheme. And if one thinks back to what Rudolph Giuliani did in fixing up New York, he started one window pane repair at a time. He tackled small things. Small things were fixed on a regular, consistent basis. A backlog was caught up, and it made an impression. It set a tone, it set a direction, it set an expectation in terms of effective maintenance and facility management. So it's really important that this is taken seriously. It is a priority. I would suggest that one of the trustees or directors is assigned the maintenance portfolio and that they take charge of this area. Again, there are many advisors. There could be caretakers, maintenance service providers. Trafalgar's portfolio team maintenance inspectors are there to help in this particular area. So it's not rocket science. We all live in homes. We all value how we would like a home to look and to feel, and we all get aggravated if it's not up to standard, if it's neglected. And very much a stitch in time saves nine principle applies. Issues that are neglected tend to snowball, tend to escalate. They become more expensive over time, and it therefore makes sense to deal with them quickly and decisively, and to have a professional team that the community scheme works with to get it done. So, just really a key point I want to emphasize as a critical success factor. Last point to say is if there are staff employed by the community scheme, it's important to make sure that they have a roster, that they have a job description, that somebody does take an interest in supervising them, that they do perform the function for which they're paid, and there's value in terms of that role. All too often, because the trustees and directors aren't there during working hours, some estates can't afford or don't want caretakers or supervisors or building managers. Therefore there's no one on the ground to supervise and take an interest. But there are ways and means around it. But important just to say, staff should be managed and correctly deployed to achieve and support effective facility management. All right, next slide. I'm just going to whiz through the next. I have 7 minutes. Just quickly on this one, enforcing the conduct rules. So it's a direct legal responsibility of the trustees and directors to enforce the conduct rules. They are there to promote and achieve a harmonious living environment. All too often we see issues in estates which are not addressed decisively, so therefore they escalate. They have lots of backwards and forwards communication and time going into it, and it can all be short-circuited by directly tackling a particular issue. Now, to do that, one needs, like I said, modern conduct rules that speak to the circumstances and the challenges at a particular estate. Those rules need to be registered with CSOS, as we said, to be enforceable. Otherwise, they cannot be enforced and binding. And they need to, you need to have the approval certificate to make sure that that is confirmed and in place. And then follow due process. So if there's a breach, if there's an issue, use the conduct rules as the tool whereby it's going to address that particular issue. follow the prescripts of the conduct rule, write the warning letter, provide the right of reply, listen to the appeal of the owners, and quickly escalate to CSAS to take it further to get a binding ruling. All too often we see procrastination, we see circular debate, we see endless backwards and forwards complaints. All of that should be circular by escalating this procedure. A, B, C, one day to the next, get through it in a week, get it done. Because if it's allowed to fester and everyone just gets sick of it, and it just delays it and prolongs. So, please make sure the rules are accurate, are targeted at the estate's needs. There's a process to do it. We've got a webinar on it. It can be changed by a special resolution. Have them approved, make sure they're binding, follow the process. If you are imposing fines, make sure they're provided for in the rules, and then apply them consistently so there's no risk of comeback. And don't delay to escalate to CSAS to get that binding external ruling so it can be enforced further and made an order of court. And I do believe if that's done regularly and decisively, you'll be surprised that issues will decline and subside and disappear, because residents will know what to expect. They will know how to conduct themselves. They will know that there are consequences for their actions, and they will fall into line. And I've seen that time and again, and I've seen the reverse time and again as well. All right, Karine, moving on. We've got the last two slides here, but just a few points on energy security and cost efficiency. So it's easy to think now that we haven't had load shedding for something like 100+ days, that it's gone, that we're never going to have it. But, unfortunately, we have aging infrastructure. So, still on a daily basis, there's failures of, various hardware equipment, which causes outages. So, it makes sense as a critical success factor to have energy security and cost efficiency at a community scheme. So, have inverters and battery backups for key access control features, security elements, CCTV cameras, recorders, lifts. There's something called an ADR, which is an automated disaster recovery unit. It's basically a battery that takes the lift to the next available floor in the event of a failure, and common property lighting. So, again, this might not be affordable straight away, but it definitely can be a budgeted item, can be a plan. It should be costed, and it should be an objective. Make sure that your key facilities and security features are backed up and they can operate seamlessly in the event of an outage. The best estates do that. There's no reason that most estates shouldn't have this. Make sure that your electricity consumption is optimized. Don't allow wastage. There's quick and easy ways to reduce consumption. I think everyone's aware of the dramatic cost escalations of electricity. CFL globes, timers on geysers or lighting, daylight switches. There are many ways to, manage electricity costs and make it as efficient as possible. I highly recommend bulk test meters being put in place to mirror the bulk meter from council with cloud logging. This means that at the push of a button, anyone can check the consumption at a complex. You can mirror the the municipal invoice. You can set the same date range. You can set the tariff structure. You can double check municipal charges. If there are long-term estimates of municipal readings, it gives you a way to track actual costs. And it's a very useful way to have independence of tracking and measuring and keeping a history of municipal charges, both electricity and water. Do evaluate, make sure that your service providers that you use, you've checked their references. They're not all equal. Everybody thinks they can install solar installations these days. I myself was caught out. I appointed what looked like a well-accredited, service provider on a reference basis to Trafalgar offices. I've been very disappointed. All contractors aren't the same. So take the time to check references, double check installations, and build relationships with contractors that are professional and reputable. And then, do plan ahead. Do have your 10-year or 5-year maintenance budget, whatever the case might be. And, it can be expensive, but break it into small phases, manageable costs, phase it over time, and you'll be surprised how it adds up to a robust and a sort of proactive installation along the lines of what I've managed there. And Karine, in the very last minute, if I can touch on water, same point. I think water security is becoming a more crucial and a more top of mind risk. Every day you'll see burst pipes, water failures, water supply constraints, around many metros. Durban and Johannesburg have been particularly severe over the last year, and it's not going to get better with aging infrastructure. So again, make sure there's no wastage. Use low flow appliances where you can. Here, a bulk test meter is crucial. I've seen many case studies where there's been underground water leaks, no awareness of it, which can cause huge bill shock accounts because water's wasted. No one's been aware. It's taken many months of significant charges to raise an issue, where if there's a bulk test meter in place, it can be set to send an alert, email or text message, if there's a high flow between 12 and 4 in the morning, as it were, where there should be a low flow. Capture rainwater to water gardens if it's available, if there's roof space to do so. It's not that expensive. It can save significantly over time. Water storage is important if there are regular water outages, to keep water flow going, and look at borehole supply if water costs are significant. For Trafalgar buildings, we have rental portfolio buildings. We have boreholes in all of our buildings. It's been hugely important in Johannesburg, where there's been massive water supply disruption, and those boreholes were installed free of charge. The cost model is 50% of our municipal savings. So we pay 50% of the saving to the service provider, who manages, maintains, covered the full installation costs, tests the water every quarter, maintains the filtering system, and it's important backup and water security to the building. So we've hit 6 o'clock. I hope you found it relevant and practical. These are my best practice suggestions after 20 years of experience. We are available to talk to any of these if it's relevant to you or useful. There are contact details. By all means, contact us. We generally come back to you on a very rapid same-day basis, and we can arrange, consultations around specific challenges and more detail if required. And, please do try and take these suggestions on board. I do think it'll make a difference. I think it will add value to your role, to your community scheme, and you will build confidence and momentum over time, one step at a time, as Peter mentioned. So everybody, thank you for your time. Thanks for joining us tonight. We look forward to seeing you at our next webinar in August. We'll send out the invitations. Those that have asked for the recording, Karine will circulate the link. It will go up on our training website, and I hope you have all a good evening. Thanks very much for joining. Good night, everyone.